Umoja Protocol, synthetic options without getting liquidated. And most importantly, there's going to be an airdrop, so stick around until the end because I'm going to show you how to use the platform and how to qualify for the airdrop. Now this video is in collaboration with Umoja Protocol, and I trust them because they are backed by big VCs like Coinbase Ventures. We can find that in the Coinbase portfolio, and they're also backed by Tres Comas.
This is my own brand, Tres Comas.
But before we begin, none of this is financial advice. This is just me showing you how to use this protocol, how to be early, and how to get exposure to it without having to actually buy a token. So you're going to get a lot of value from today's video. Before we begin, we got to understand leverage trading. Now, leverage trading allows you to trade with more power than you actually have. So if you have $1,000 in your account, you can trade with up to $10,000 using 10x leverage. But the problem here is if the price of your investment drops by 10%, you lose everything. Everything is gone in an instant. And that can happen very quickly in the event of a black swan event. So in recent news, almost $300 million in leverage positions liquidated this morning as a result of Israel's attack on Iran. Prices quickly bounced back as it became clear there was little damage. So if you were holding a 10x position here and the price dropped 10% very quickly and then continued back up, you would have lost everything. But with Umoja Protocol, there is zero liquidation risk and you always get back your collateral. So in the event that your position starts losing value, you have two options. One, you could top up your collateral, and that's when the collateral ratio of the synth falls below 7.5%. An automated email, if you register your email, will be sent to the user informing them to make the collateral deposit for the respective synth. Then you'd get an email like this: we'd like to inform you that the collateral ratio for your ETH Boost synth created on this date with a strike price of this has fallen below the ratio of 7.5% and will require a top-up. The synth coverage will be halved if the collateral ratio falls below 5%. So that just means the value of your position is lower if you don't top it up. And that's because it's dropping in price and you're using leverage. And this is how you can maintain the value of your collateral through either topping it up or just accepting that the coverage will be halved. Because with Umoja Protocol, you don't get liquidated. But let's say you do, there is an insurance fund for that. So the insurance pool insures the protocol and thus all synth users against black swan events and protocol exploit. The insurance pool is a pool of funds created to ensure the global hedging pool from black swan events, and all of this is funded from excess collateral in your hedge or boost positions, which we'll get into right now. Alright, I'm not as articulate as Robbie Greenfield, the founder of Umoja Protocol. I will leave a link in the description to their tutorial videos. They were incredibly helpful, so I'm just pretty much going to show you the same thing, but worse. So first off, we go to protocol.umoja.xyz, link in the description, and we have to connect our wallet. Now the thing is, they operate on Arbitrum, and you need USDC, so I'd like to see a future enhancement where they do include those icons so it is more intuitive. Otherwise, it might not make sense immediately what you need to get started. So you have two options here in the synths section, hedge or boost. Now these are synthetic options which aren't really options, but they act like it. Now hedge is if you're bearish and you think the market is going to drop, and boost is if you're bullish, if you think the market is going to go up. So these simulate 10x options. So what happens here, after you place your position, your funds get sent to an off-exchange settlement provider, and then those funds partially go out to different exchanges for their liquidity, places like Binance where you can trade futures, and that's where your position gets set up. So your funds aren't completely on an exchange where you have that exchange risk, and it is held by an institutional custodian. So with that, let's get synthing. All right, I've connected my wallet and we're ready to get started, and we're gonna set up a hedge. This is gonna simulate 10x leverage as a synthetic option. So we're going to select a token, we're selecting Bitcoin, and we want to do 0.1 BTC, which is $6,293. So we're protecting $6,000 here. And we want to protect it up until Friday of this coming week. And we're going to enter a strike price. So we see the current price of $62.93. We can't go over that since we're bearish. We need to enter a strike price below the current price. So I'm going to enter $62,000 and we're going to set up a hedge. And then we have our confirmation page. So we're protecting 0.1 BTC, which is really about $6,300. The protected asset is BTC, the amount, the coverage expiry date, coverage strike price, and the collateral. So the collateral of whatever we're protecting is always going to be 10% of that value. So whatever you're trying to protect during a hedge or boost, you're going to have to put up 10% of the collateral. So it's always lower than it really looks. And there is no Umoja fee at the moment. I think they are doing a promotional thing where they're covering the fees and the insurance for users. So total down payment of this hedge is $629. That looks good, so I'm going to hit hedge, and then we have to confirm it in our wallet, and I'm going to sign that. And in just a moment, the transaction is broadcasted, and we can set up email notifications for our position. So add an email address to receive notifications about activities on your hedges and boosts. Now, KYC isn't required for this platform because it's all DeFi, but if you want to get notifications in case something's happening and you want updates, then you can enter your email address. I won't. So here we are at our position. You can see the notional amount we've started at, the current price, the starting price of the BTC USD spots, current strike, total paid. Not much data since this just started, but this is also available in our dashboard. So we go to our dashboard, we can see this BTC hedge is active. I had another BTC hedge earlier that was left as a draft, and we can get rid of that. So I'm going to delete that draft. There's no order there, so we're all good. Now, if we go back into the BTC hedge that we just opened, we can close the hedge, but not yet. So you actually have to wait 2 hours after your hedge is open to close it. And when you close a position, it takes 20 minutes. Just because on the back end, it's running through a custodian, it's running through several exchanges for liquidity, so it does take time to open and close these positions. So with this BTC hedge we just opened, it's not really active for the first 2 hours, and then once it's open for these 2 hours, then we'd be able to close it. And then that closing process takes 20 minutes. So it's kind of doing a lot on the back end, and it could be faster, it could be longer, but that is just what the estimates are. And we can go back to the dashboard and look at some of my other positions. I have some active, I have some closed, and I do have BTC hedges and boosts. Hedge, bearish, boost, bullish. So you can see the estimated totals. This is a BTC boost I closed, and I took a loss of 13.39% because I thought the markets were going up and they went down. And here's a BTC hedge. I came up 7.43%, but I closed it too early and the market continued to drop. So that just shows you I have no idea what I'm doing, and I just take a lot of different risks until I'm rich or poor, completely poor. Right now we are at the poor stage of life, but I'm hanging in there and I'm wealthy in happiness. All right, so let's set up another synth and let's say we're bullish. So we're going to hit boost. We're going to select BTC. We're going to protect 0.01 Bitcoin, so it is a lot less, and we think it's going to go up in value by Friday of this coming week, but we can really set these at any point in time. So I'm going to select that, and we're going for a strike price of $63,000. So I'm going to submit boost. We're boosting 0.01 BTC, protected asset, amounts, and collateral. Now, if you want to use this platform, the bare minimum for boosting or hedging BTC is 0.01 BTC. So about 63 US dollars at current prices just to set up positions. So if you are going to be trying to use the platform and earning points, there is a minimum required to get started. So with this, it looks good. I'm going to hit boost. I'm going to confirm the transaction in my wallet when that pops up. Then I'm going to confirm it in my wallet. And in just a moment, this should open. So now the position is opening and we won't be able to close it immediately. It's still going to take at least 2 hours. So your boost would be closed and payment would be processed to your wallet within 2 hours. So let's say we did want to close it. I'm going to hit close, close boost. Boost closure possible only 2 hours after creation. Please try again later. So yeah, there's nothing we can really do, but let's look at another position and close it. So let's look at an active position we have here. You can see some just appear as drafts if we don't complete it, and you can always just delete the draft and that goes away. And we also have closed positions here that are just always going to appear in your dashboard. And if you're in your dashboard and just want to filter everything out, I just sort by active, and that removes all my closed positions or drafts. So you might want to set that to active. It makes things look a lot cleaner. And we can close out a position. So let's say we are losing badly in one position here, and this is for something I have expiring in September, and I'm okay closing this just so I can show you how it works. We're going to close this position and it's going to start closing. So your boost has been closed successfully, and that's it. We didn't really have to sign anything in our wallet to close the position. And in the next 20 minutes, we're going to receive the USDC in our wallet from that position. Now, what's happening is it's closing that position in several different exchanges where it's sourcing that liquidity. Those funds get sent over to the custodian, and then the funds get sent to Umoja and then to us. So the money is moving around. It does take some time. But the great thing is, if you are closing a position with Umoja, no confirmations, and it just appears in your wallet later. So very smooth. I do like that process. And that's how you set up synths with Umoja. These are synthetic options where you can hedge if you're bearish and boost if you're bullish. How to get the Umoja Protocol airdrop. Now, unfortunately, the early adopter airdrop campaign is now over, but it looks like they're having airdrop seasons. So I highly recommend following Umoja Protocol on social media, and I'm gonna leave links to them in the description, because you can find certain campaigns where you would get early exposure with maybe some of their partner networks like Paid Network. They're having a Gleam campaign with Umoja Protocol. 10 winners will share $1,000 in paid tokens and $1,000 in Umoja by completing a set of simple tasks. So that might be worth it to you, but the easiest way to get the airdrop is to actually just use Umoja Protocol. It doesn't matter if you're using Hedge or Boost, as long as you have positions available and open, you're earning points. So if we look at the points leaderboard, we can see how many points people are earning, and that can be a lot of points or even a small amount of points. Now let's say you just wanted to farm points without the risk. Umoja Protocol is actually meant to do that because you can hedge and boost. And that's exactly what you would do. You would open up a position in the hedge side and the boost side for the same amount, and you would just be paying the insurance fees. Points are rewarded based on two main factors: total notional value, so that is the amount that you are protecting, and synth active duration. How long are you keeping that position open? You can set a position open for several months. You can close it at any time, but the longer that the position is open, the more points that you are making daily. So that's how you earn the airdrop. All right, we learned a lot today. We learned about synthetic options and the best scenarios to use that when compared to leverage trading, and how to get their airdrop. So if this video was helpful, you know what to do. I'm gonna leave links to Umoja Protocol in the description. And with that, I hope you got your full value for today.